Welcome to Adasina's Q4 2024 Investor Briefing. My name is Afsana Jahan, and I'm Adasina's Director of Relationship Management and your facilitator for this investor briefing. Very briefly about myself, what makes me really excited to work at Adasina is the differentiated approach that we take as a public equities asset manager, which really enable us to create large-scale impact by bridging the gap between financial markets and social justice issues. In this briefing, we will share key details from our upcoming Impact Report, 2024 calendar year performance of our public equity strategy, and initiatives taken to continue Adasina's firm-wide growth. A couple of housekeeping items first. As you may have noticed, there is a slight change in the format for our investor briefing. So for Q4 2024, you are watching or listening to a pre-recorded Adasina investor briefing instead of a live session. We will continue to deliver key updates and insights on portfolio performance, recent impact milestones, and strategic initiatives. We hope making the recording available will enhance the accessibility for the entire Adasina community. A key firm update that I'm very happy to share with you today is that Adasina introduced co-CEO structure to enhance the firm leadership. Julian Zimmerman was announced as the co-CEO of Adasina Social Capital in November 2024. She will share the role with firm's founder and co-CEO Rachel Rubashuti. Thank you for taking the time today to listening or watching Adasina's Q4 2024 investor briefing. Now we will dive into the next two topics, investment and impact update. Our two speakers we have today is from the Adasina's Investment and Impact Group, our Managing Director, Roberto Thornton, and our Impact Strategist, Kevin O'Neill-Smith. Now, Kevin will share with us a summary of our latest 2024 Impact Report, highlights on our extractive agriculture investor mobilization campaign. Followed by that, Roberto Thornton will share about performance of Adasina's public equity strategy.
Hi, everyone. My name is Kevin O'Neill-Smith, member of the Impact team here at Adasina Social Capital. I'm excited to share some updates coming from our department. First off, we are about to release our second annual Impact Report, highlighting some of the amazing work we started, continued, and accomplished in 2024. This work is centralized in our four key pillars of social justice and impact: racial justice, gender justice, economic justice, and climate justice. In 2024, the Impact Department continued numerous initiatives related to racial justice, including supporting the development of Hip Hop Caucus's Banking Black and Green Climate Pledge. You'll recall from our last investor briefing that in support of the Hip Hop Caucus, we crafted an investor letter highlighting the critical need for increased cash deposits and investments in Black-owned banks. And while Adasina typically organizes investors around publicly traded companies, supporting and uplifting Black-owned banks is aligned with our mission of divesting from prisons and amplifying Black and Indigenous voices while remaining materially relevant to investors. Adasina promoted the letter by featuring it in our previous investor briefing, engaging our network and spreading awareness of Hip Hop Caucus's invaluable work across a broader audience of over 200 investors and financial professionals to join this vital movement for change. Through Adasina's support in the first 30 days of its launch in October 2024, the Bank Black and Green campaign secured $37 million in investment commitments. In October 2024, Adasina introduced the Bank Black and Green campaign at the annual Impact Experience event, securing the initial investor commitments and signatories to the investor statement. Building on this momentum, the campaign is on track to exceed $180 million within its first year, actively engaging investors and communities together to advance economic equity and inclusion. We encourage you to sign and share the Bank Black and Green investor letter and the Bank Black and Green campaign with your network. In addition to our work with Hip Hop Caucus, we continued engagements with our portfolio companies around board diversity as it pertains to race and ethnicity. We were featured in important panels such as the Palestine in Your Portfolio series and at the First Nations Major Projects Coalition Conference in Toronto, speaking on Indigenous rights risks in investment portfolios. We also contribute to important working groups such as the Investors and Indigenous Peoples Working Group, the Racial Justice Advisory Committee for As You Sow's Racial Justice Scorecard, and the Racial Justice Investor Coalition, where we've been focused on developing educational resources that connect proxy voting with racial justice outcomes. In the field of gender justice, the Impact Department has stayed busy planning the upcoming launch of a gender justice investor mobilization campaign that will be supported by important groups and partners representing the LGBTQ+ community. Additionally, we've continued engagements with our portfolio companies on the topic of gender diversity in the board of directors, encouraging companies to reach 50% gender parity by 2035. Through this initiative, we found that Adasina's portfolio exhibits significant progress toward gender diversity, with 59% of the companies in our portfolios having over 30% women on board roles, surpassing the US national average of 29.4%, according to the 50/50 Women on Boards report, and the global average of 23.3%, as reported by Deloitte Global in 2023. This figure is notable given our focus on international markets, many of which have not prioritized gender parity. However, it highlights how far publicly listed corporations still have to go to achieve gender parity on their boards. We encourage the impact investor community to follow our lead, dive into their respective portfolio holdings, and engage with those holdings to promote board diversity. When it comes to economic justice, we've stayed laser focused on our sub-minimum wage campaign and celebrated wins in many state elections related to raised wages and increased protections for tipped workers across the country. Going forward, the campaign is planning to move legislation to end sub-minimum wages for tipped workers in Illinois, Maryland, and New York. Furthermore, in 2026, we have our eyes on ballot measures planned for Ohio, Arizona, and Colorado, and we will keep our beloved community updated with ways to support those initiatives in the coming months and years. Additionally, we encourage you to review and endorse the investor statement in support of ending the sub-minimum wages for tipped employees, which is available on our website, and to become a part of and attend working session with the Sub-Minimum Wage Investor Coalition by emailing us at impact@adasina.com. Moving on to climate justice, it will be no surprise to anyone who's been staying up with our work that 2024 was the year that we officially launched our extractive agriculture investor mobilization campaign. In partnership and solidarity with our friends at ETC Group and Friends of the Earth, Adasina released an investor data set and an investor statement related to extractive agriculture. These tools are designed to empower investors to collectively mobilize and inspire change in company operations and to shift from extractive practices to ones that take into account their impacts on people and planet. As a reminder, extractive agriculture refers to the extreme dominance of only a few companies that control the global food and feed supply chain, whose business models directly drive biodiversity loss, excessive greenhouse gas emissions, elimination of smallhold farms, abuse of farm workers, proliferation of toxic and carcinogen chemicals, topsoil loss, and many others. To reduce the harms of extractive agriculture, we seek to invest in alignment with social justice movements and inform and mobilize the finance community to invest for systemic change. For more information regarding extractive agriculture, I encourage you to download and read Adasina's issue brief covering the systemic harms of industrial agriculture, its materiality for investors, and how you can support change within the industry. In addition to our work that is aligned with our 4 key pillars of social justice, I also wanted to shamelessly plug a few other tremendous accomplishments our firm and team had in 2024. Adasina engaged in approximately 8,195 proxy votes and opposed management more than 2,600 times to uphold ethical governance. We supported 32 shareholder proposals aimed at social justice focused on issues like DEI, corporate governance, and excessive compensation, as well as transparency in political spending, ESG, human rights, pay gap analysis, and military and tobacco industry involvement, reflecting our continued commitment to equitable and sustainable business practices. Furthermore, Adasina proudly celebrated the recognition of our managing director, Danielle Burns, who was honored with the Who's Who in Impact Investing Award by Impact Finance Center and the Denver Business Journal. This accolade highlights Danielle's exceptional contributions to the field of impact investing and reflects her longstanding commitment to advancing social justice in public markets. We are so grateful and blessed to have Danielle on our team. And of course, we can't forget these investor briefings. In 2024, Adasina launched the quarterly investor briefings initiative to provide our community with information that inspires action towards social justice. These briefings successfully encouraged participants to join investor coalitions, learn more about our investment products and investor mobilization campaigns, and support social justice partners. Through these efforts, Adasina reinforced its commitment to fostering a community of purpose-driven investors dedicated to driving systemic change and a sustainable financial ecosystem. Now, as I close this out, I'd like to center a few calls to action for us all. I encourage you all to download and read Adasina's 2024 Impact Report. I encourage you to consider signing Adasina's investor statements addressing extractive agriculture, sub-minimum wages for tipped employees, and sign Hip Hop Caucus's Bank Black and Green Pledge. I also encourage you to email us at impact@Adasina if you have interest in joining our investor coalitions addressing any of our campaign topics like extractive agriculture or sub-minimum wages. I also encourage you to keep an eye out for Adasina's upcoming Gender Justice Investor Mobilization campaign with updates to come in summer of 2025. I think that's it for me. Thank you very much.
Hi, my name is Roberto Thornton. My pronouns are he, him, his, and I'm the managing director for the Investments and Impact Group here at Adasina. I'll be providing some investment updates, primarily focusing on Q4 2024 justice performance, as well as year-to-date justice performance for 2024. And I'll provide some commentary. So just kicking things off and talking a little bit about our Q4 2024 performance, and that's as of December 31st, 2024. So over the last quarter, Justice has returned negative 1.93%, trailing behind GSAC, with GSAC coming in at negative 7.2%, excuse me. So about a difference of negative 1.21%. So both GSAC and the Justice Index ended the quarter in negative returns. I want to do a little bit of a summary on some of the contributors and detractors for justice by sector and as well as individual security. So for index contributors by sector, we're seeing the largest positive contributions to return from financials at a positive 0.7%, as well as IT positive 0.39%. In terms of index detractors, we're seeing the largest negative contributors to return from healthcare at negative 0.79%, as well as communication services at negative 0.67%. In terms of contributors and detractors for individual securities for our Justice Index for the quarter, the largest positive contributors at the security level is AppLovin Corporation. They saw a positive return of 157.59%. And then Snap-on Incorporated with a return of positive 17.87% for the quarter. Detractors at the security level, we're seeing the largest negative contribution to return from Merck with a negative return of negative 11.69%, and NXP Semiconductors with a negative return of negative 12.99%. Again, these are contributors and detractors for quarter to date as of December 31st, 2024, so that Q4 date. So that kind of gives you some highlights, broad brushes for our quarter to date information. I want to just do something similar for the 1 year performance as of 12/31/2024 for 2024. So during 2024, the index returned with a positive 10.44%, still trailing behind GSAC. GSAC came in at a positive 16.8%. So a difference of about negative 6.36%. Similar to contributors and detractors, I want to highlight some contributors at the sector level as well as the individual security level. And we're seeing some similarities for the 1 year performance as I kind of shared with the quarter to date for 2024, for Q4, excuse me. So in terms of index contributors at the sector level, we're seeing financials have a positive contribution to returns at positive 6.05%. And for industrials, we're also seeing a positive contribution to return at positive 2.6%. In terms of sectors that detracted a little bit, we're seeing for the year, the largest negative contribution to returns were communication services at negative 0.17% and utilities at negative 0.05%. And then at the individual securities level, our largest positive contributions to return, again for justice, we're seeing at Blovin Corporation at a positive 313.29%, and Aflac Incorporated with a return of positive 41.15%. And then going to focus on the individual securities that we're seeing the largest negative return. We're seeing Merck with a negative 19.11% for detractors, and then Adobe came in at a negative 25.46%. So that's just, looking at the year performance again as of December 31st, 2024 for justice. I want to talk a little bit more about the Mag 7. All of 2024, we've continuously had a dialogue around Mag 7. So the majority, as you all have heard throughout 2024, the majority of the Mag 7 have been excluded from our portfolio. And the majority of the Mag 7 names collectively averaged about positive 46% for the year. But again, those were excluded from our portfolio due to them violating our social justice investment criteria. The only Mag 7 company that we have is as of 2024, is NVIDIA. NVIDIA is in the Justice Index, but it was only more recently added to our Justice Index during the December reconstitution. So the index didn't really fully experience the full year's return of 171%. There are a number of other new constituents that were not the Mag 7, but ones that were recently added to our index within the December reconstitution. So that's AT&T, Booking Holding, Eli Lilly, HP, and IBM, just to name a few. And these companies collectively had an average return of positive 32% for the year, but we did not fully experience that year return because, again, they were added more recently to our index. So let's talk a little bit, let's go revisit the Mag 7 topic. Just to give you all a few examples of the exclusion or the violations that were causing us to exclude the Mag 7. So I'll give you, two examples. So we can first talk about Tesla. So we saw multiple violations for Tesla across a few of our social justice pillars. So we saw an economic justice criteria violation, that being working conditions and excessive executive pay. We also saw climate justice, social justice investment criteria violation for pollution. And then there were 2 violations for our movement aligned investment criteria, and those were accounting and management and corporate governance. Another example with Microsoft. Microsoft had a similar violation under the economic justice investment criteria, and that was for the excessive executive pay. And then we see another violation from Microsoft, which is on the movement aligned social justice investment criteria, and that was for social conservatism and political support. So those are a few examples of violations for two of the Mag 7, excluding, again, NVIDIA. Now, our hope is that these M7 companies, along with others that have been excluded due to the violation of our social justice investment criteria, we hope that they do end up being included in our portfolio in the future. However, as long as they violate our social justice investment criteria, they will remain excluded. And this is really rooted in transformative justice. And transformative justice prioritizes accountability and behavior change. And that's accountability and behavior change over just punishment for the sake of punishment. So we don't seek to just punish these companies indefinitely. We want them to not violate our social justice investment criteria. We want their corporate behavior to be in alignment with our social justice investment criteria, because in turn, that means that they are in line with the broader social justice movement. So what does this all mean, and how do we take some of the information I shared and connect it back to the investment strategy, our investment strategy? So we had a difficult quarter. The Justice Index had a difficult quarter, but we also saw positive returns for the year. And yes, the year-to-date return could have been higher as we look at the trailing of the GSAC for year-to-date performance for the as of 12/31/24. But we remain convicted to the belief that it's important to not seek to maximize profits at any cost, meaning we will not invest in public companies if they violate our social justice investment criteria, even if that means missing out on short-term benefits. Unfortunately, it's really possible, it is possible, and it can be possible to profit from unsustainable activities that extract value from historically marginalized people and create social justice risk. We believe that our social justice investment criteria acknowledges and quantifies social justice risks in ways that extractive investment portfolios do not. We believe that these risks can impact investment or extractive investment portfolios in the long run. So what that means is our portfolio will continue to try to deliver aligned financial returns by investing in sustainable companies for the long run. What it will mean is we will continue our process of quantifying social justice, investment risk, and valuation factors. And we'll continue to construct portfolios that deliver social justice risk mitigated returns. And as a result of managing these social externalities, our portfolio's returns may be higher, and maybe sometimes they may be lower than those that are obtained by investing in companies that tend to only focus on profit maximization. But what you will get is a portfolio that's in alignment with social justice movements that aim to not violate our social justice investment criteria, and portfolios that are managed by people from the communities in which we serve. We appreciate our clients. We appreciate your adoption of our theory of change. And most importantly, we value you and your support for our products. And we look forward to continuing to service you and partnering with you as we continue to align to social justice movements.
Thank you, Roberto and Kevin. This wraps up our Q4 2024 investor briefing. We look forward to engaging further with you and offering more resources to help you integrate social justice values into your investment strategy, fostering long-term positive impact. If you have any questions, please reach out to us at invest@adasina.com. Once again, invest@adasina.com. We also welcome any insights and any feedback, questions, or suggestions you may have. Please feel free to email us at events@adasina.com. Once again, events@adasina.com. If you have not yet, please subscribe to our mailing list to receive all timely updates from Adasina's impact and initiatives. Once you have subscribed, please keep the eye out for the upcoming impact report and information about our Q1 2025 investor briefing. We hope to see you there. We look forward to working with you this year and believe together we can become the formidable agents of meaningful impact, benefiting both people and planet. Thank you again.